Hi everyone. This is my 143rd video. It is Thursday morning, about 10 after 9. I want to discuss what's going on right now in terms of the market. It is clearly turned into a panic. Panics don't happen all that often, and they are always extreme, whether they're, uh, have a fundamental or an economic reason for happening. I want to show you the chart on the S&P. This is a monthly chart that goes all the way back to 2010. And what I want to point out very specifically is something called a measured move. And generally, what happens is that once something turns down or up, really, and has an extended move, and then rallies, the next move to the downside is generally about the same. Now, what I'm going to point out to you goes back to 2018 when we topped out in here just under 3,000 and we broke back down to 2,600, so roughly 400 points. And then we rallied back up to 2,800, which was about halfway. Then on the next move down, we made a new low, which coincided with the 50-week or 50-month moving average of 2,300. If you go from here at 2,940 down here to 2,500 and change, what you get is another extension the same size. The reason I point this out is because we've done that again, and we topped out here right around 3,400, and we came all the way down here to just under 2,900. So roughly 500 points. We rallied back up here to 3,130. And on the breakdown, we should have about another 500 points. Right now, we're trading limit down, and we're trading exactly 550 points below. And coincidentally, we're also back to that 50 bar MA. So, what does it all mean? Well, it means that in a panic, things always get excessive. And that's what I think we're seeing. If you read my stuff or you listen to my videos and recordings, you'll find that I've been railing against the stock buybacks. And I want to give you an example of just one that really proves the point. One of the biggest companies in America, major contributor to GDP, Boeing. Boeing yesterday took down 13.8 billion in revolver credit. Now, you'd think Boeing, it's the largest aircraft manufacturer in the world, and yes, it's had trouble with the 737 MAX, and now a bundling issue. But the point is that in looking at Boeing's balance sheet, it turns out Boeing has 1.2 billion shares outstanding, and the stock is currently trading around 160, which is down from 440 2 years ago or a year and a half ago. And a look at the balance sheet shows that the company is dramatically backwards in debt. The reason? They bought $54 billion worth of stock on the way up. And I've mentioned this before that I believe that there will be lawsuits against all of these companies when the shareholders start to see this dramatic decline and realized that instead of putting money into plant and equipment, basically the companies pumped up their earnings by decreasing the number of shares outstanding. So just so that you have an understanding, Boeing had about 3 billion in debt. It then added 14 billion. So the company now has a negative value based on the fact that it bought back all of this stock, a lot of it now, as it turns out, with borrowed money. And while I don't think that the government would allow it to go under, it's facing some very serious hurdles on the financial side. So, just to recap, measured moves, roughly equivalent of a break, happened here in 2018, happened here in the last 2 months, both times coming down to what has supported it well, which is the 50 bar moving average. Could it go down another 200 to 24, 24.50? Absolutely, it could. But the point is that in a panic, all of these things will overreact, as you can see just in our day to day lives. But there will be a tradable rally here, possibly even a bottom. Have a good day.